Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager for GDM. Today's outlook, we start with Tokyo stock prices. Little 15-year highs, but Japanese corporations remain pessimistic about the country's growth potential as Abenomics has fallen short on expectations. Japan's consumer inflation eased in February for a 7th straight month, increasing expectations that the Bank of Japan will have to undertake future stimulus measures to achieve its price target. This is a data that came earlier in the Asian session. The consumer price index rose 2% in February from the year ago period. Government data showed this early today compared with a forecast for a rise of 2.1% and down from 2.2% in January. More than 2 years after Prime Minister Shinzo Abe returned to power, a sharply weaker yen has boosted profits at blue chips exporters, spurring a sharp stock rally. Stronger dollar, however, brought the JPY at close at the 21 exponential moving average, turning our moods mostly neutral for the European trading session. European markets look set to buck the trend set by mixed trading among Asian equities on Friday morning as worries over political chaos in Yemen and weak inflation data from Japan kept a lid on gains. European equities opened slightly higher yesterday as investors appeared to have dismissed concerns over the growing potential conflict in the Middle East and Yemen. Greek companies, however, and households pulled 7.6 billion out of their bank accounts during the government standoff with its international bailout creditors in February, driving deposits down to 140,500 billion, with lowest level in 10 years. Our bearish outlook on the pair remains. Prior, of course, to the GDP data for U.S. in about 4 hours' time from now. Therefore, until then, we will follow the market and make a decision where to trade. In UK, however, Prime Minister David Cameron won the first TV encounter of a close national election in Britain. An opinion poll showed, but opposition Labour leader Miliband leveraged a rare opportunity to promote himself on a national stage. Britain's failure in the European Union and its territorial integrity could ride on an outcome as Cameron is pledging an EU membership referendum. And of course, Miliband may need to do a deal with the Scottish nationalist intent on breaking up the United Kingdom. The sterling is aiming lower at the moment. Commodity sector, gold rallied to 3.5-week high yesterday as escalating tensions in the Middle East knocked stock and dollar and drove investors into assets viewed as lower risk such as bullion and German bonds. However, the price is now trading below the 1200 level at the pivot point at 1198.50 as traders are closing positions prior to the U.S. analyzed gross domestic product report. U.S. crude settled up $2.22 or 4.5% at $51.32 a barrel yesterday, its highest settle since March 4 after Saudi Arabia and its Gulf Arab allies began airstrikes in Yemen, striking fears of a bigger Middle East battle that could disrupt world crude supplies. The price, however, is now traded modestly lower at 50.40 now, bouncing off the first support level earlier throughout the Asian session. And of course, the GDP report for US will be released at 12:30. That's all from me for today. Thanks a lot for watching and keep an eye on that report. Bye-bye.